Welcome to Market Makers, everybody. We have extreme fear, near peak fear in the marketplace. We have an ongoing conflict in the Middle East. What a time to be alive. We have the market selling off, Bitcoin, cryptos catching a bit of a bid. We're going to cover it all in today's video. Hope all you guys had a fantastic weekend. So let's talk about where we are, because one thing that strikes me, and you guys see it in your YouTube feed, your X feed, is people in some type of position of authority or feel they're in some type of position of authority want to tell you exactly how things are going to play out. I want to bring back this throwback clip from Don Rumsfeld. He said this about 20 years ago during the last big conflict with Iraq, Afghanistan, and I thought it was so apropos for the current time that we are in. Lee, go ahead and play this. I'll talk to you guys about it on the other side.
Reports that say that something hasn't happened are always interesting to me, because as we know, there are known knowns. There are things we know we know. We also know there are known unknowns. That is to say, we know there are some things we do not know. But there are also unknown unknowns. The ones we don't know, we don't know.
The short version of this is know what you know what you don't know, and know that there are possibly things that you could never know, meaning like a black swan event. When Don Rumsfeld said that, it befuddled everybody. It went viral. People couldn't understand it. But that's what he's talking about. And in the space that we're in, it's occupied by people that are going to tell you exactly what happens. Some of you may think that's how I am, but I'm telling you my opinion of what I think will happen, and I'm not speaking from any position of authority. I think all of you, the best advice I can give you as a trader, take in like a sponge all of the information. But the successful traders, you're already talking about the top 20% of the population with a high IQ. Those are the successful traders. And you take that information and then use your own judgment. Discern the outcomes. I view the markets from a sense of probabilities. You guys have heard me talk about this, relating it to gambling or poker. Understand the odds and percentages for different events to play out. That's worked very well for me. It may work well for you. You may have your own system, but understand, we had an indicator back in the 1990s called the magazine cover indicator. I think it's still around. But the idea was, in moments of peak fear or peak euphoria, which let's check on the markets. We're at a 10, extreme fear. In moments of peak fear, in this case, you would have magazine covers saying Trump's going to collapse the economy. Just like last year, tariffs are going to collapse the economy. We're going down by 50%. Hyperinflation, stagflation. The world is going to revolt against this. Treaties are going to dissolve. You get peak fear commentary on the magazine cover, just like the dot-com bubble top. Everybody's going to be rich, millionaires minted every day, revolutionizing the world with the internet, which was true, but it marked the top. And then you had the massive 50% haircut in the marketplace. We have crypto over here and a 26, 27 on fear. So the modern day magazine cover indicator for me is going on YouTube. And I like to look at David Lin. I like David Lin. I like looking at his podcasts here. But just look at this, because this is a financial podcast. Going back a month, okay? Let's just gauge this. Going back a month when this conflict was starting. Bottom right, next market crash to last 20 years, Gareth Soloway. 20-year market crash. Now, I'm on the opposite side of that trade. I believe under Trump, you're going to see the S&P get to 10K plus under his presidency, and my next cycle top on Bitcoin's 170, 200,000. And I think you're going to see all this occur under Trump. So definitely opposite side of that trade. Endgame revealed, existential risk. Let's just keep scrolling up as we get the war escalating, the conflict escalating, biggest sell signal flashing, great rotation out of stocks as the markets enter the fourth turning. Those of you that don't know what the fourth turning is, the fourth turning is a hack job of a 100-year cycle. The 100-year cycle has been written about for over 150 years by economists and market analysts. The fourth turning, you have to rename things. This is the same thing that happens in trading systems. You take a bunch of things that other people invented, repackage it, and say, look at my trading trading system, and then you sell it to people. That's the fourth turning. So that's what that is. It's a 100-year cycle. System breaking point, one asset to double. The system's breaking down. Gas shortage, $250 oil. Global market panic. And you keep scrolling up as the war keeps picking up. 90% market crash. 2008 credit cycle. Oil crisis 2.0. The bubble's going to pop. Keep going. System collapse signal. Is seismic shock ahead. Energy crisis. Devastation. Worse than 2008. Soloway again, crash just starting 11 days ago. I think this retracement, which hasn't even triggered a full retracement yet, is getting close to the bottom. So the point of looking at this is juxtapose this with where you are on fear and greed. Extreme fear, and it's reflected by the headlines that you are seeing in the financial place. Why? Because this gets clicks. You want to get 130,000 views? Put a title like 20-year market crash. That's how you'll get it. Another 50% crash. Well, Mike McGlone has like major TDS, so keep that in mind too. Most of Wall Street does. Let's talk about where we are here on this cycle and what these targets are. By the way, guys, if you want to get my market videos, my crypto videos throughout the week, click the join button right there on YouTube. For members, I put out additional videos all week long. And you can also jump over on our Discord. If you want to trade these markets, check out BitUnix, SimpleFX, be a market makers VIP. You can do that right there in the video description and trade these markets. Here we are on the S&P. Spring equinox in green. Previous videos, we covered spring and fall equinox, cardinal point in the market. We're talking about the 30 days surrounding the equinox points. Here we are selling off into the spring equinox. When did we do that? We did it last year. Bottomed April 7th, strongest turnaround rally in stock market history. By the way, down here, not just picking on YouTube, CNBC, or these other financial networks, Paul Tudor Jones, who, by all accounts, is a great trader, great investor. He said, don't buy this market. We could easily go down to 50%. You saw that all over the place. First, I want to see it flip to 200, flips to 200. First, I want to see it, then I want to see it flip to 50, flips to 50. And by that time, you're breaking out to new all-time highs. So just understand this is common. Now, somebody on X asked me, by the way, follow me at Market Canary on X. Somebody on X asked me, when was the last time, because my prediction is we get this retracement, we bottom and rally into the summer. When was the last time we did that? Well, we did it last year. We bottomed spring equinox 2025, rallied all the way into January actually, did the same thing in 2024. Bottomed in the spring equinox, rallied into July, did the same thing in 2023. Bottomed in the spring equinox for a pullback, rallied into July. I think we're doing the same exact fractal once again. We're going to bottom. I have that bottom if we continue down 6,000 to 6,200, and then we're going to rally. So if we look at this on a 3-day chart, couple of interesting things on a 3-day chart, what could this look like? This could look like a double top. Here is your low from the April sell-off, right? The tariff sell-off. Everybody told you it was inflationary. It's going to crash the market. All you had to do was review tariff history from the 1920s and any other time period. Tariffs are deflationary, and we had a roaring stock market with the largest tariffs in U.S. history that climbed 500% in the stock market. And that's what we're doing, is repeating the 1920s. If we come back down, where's that target? 6,000, 6,200. This lines up with the 382 and 50% from that low as well. Here's the rally. Does the rally make a lower high, giving us a double top? Does the rally make a new high? Base case, just have a base case, have a bull case. Base case, you're going to get a lower high rally, right? Bull case, you break out to a new all-time high. But remember, I think if you go back into my videos from January and February, we were talking about this year being a 2 retracement year. First retracement's now, then you're going to get your summer rally, and then you're going to get your pullback / retracement with the midterm cycle, and then you turn up, and I think you finish the year with a big rally, okay? So even if you have a base case of a lower high, you're still talking about a very nice rally going into the summer, some type of retracement, pullback, with the midterm election cycle, bottoming, and then breaking back out. I think you're going to finish the year very strong. Why do I say that? Because I have charts too. Lee, throw up some charts. January effect. Guys, follow me on X at Market Canary. You can just download these charts. I will post them if you want them. First 5 days green, the year ends green. History does not lie. Since 1990, we've had 24 times the first 5 trading days finished green in the S&P. 100% of the time, you had an up year. The average gain was 21%. And guess what? 2026, first 5 trading days finished green. So keep that in mind. Powerful cycle in isolation. Next chart, Lee, 200 years of decennial data. You guys hear me talk about the decennial cycle quite often. Year 6 in the decennial cycle. For 200 years, 85% of the time finishes higher, not lower. Go to the next chart, Lee. Midterm years. You see these charts all over X right now. Midterm years since 1950. Here's your average drawdown is roughly 15% for those of you that are curious. You get roughly a 15% drawdown, but the key is what happens after that. Well, let's look at the midterms in a modern cycle since 1990, right? The VIX wasn't even around until 1990s. Modern cycle, computers, internet trading, all of that stuff since the 1990. 1990, since then, we've had 3% gains on the average midterm year for the stock market. Now, the stock market average was typically 8 to 10% for a year. So take out 2002, which was the explosive, dot-com bust. So you were bottoming in 2002. That's when you made your bottom. Take out 2022, which was a 40-year high inflationary cycle. And then you have an average gain of 9.57%, which is on the strong side of gains. So the midterm cycle, what does that tell you? In isolation, volatility. But since 1990, it finished positive. January effect finished positive to the tune of a 21% average gain. And of course, year 6 decennial cycle, 85% of the time finishes positive. Just some positive confluences going into 2026. So 3-day chart. Something else I want to show you. If we open this guy up, look at the RSI. They say, well, that's not very interesting. You're oversold. Big deal. Do you know how many times a 3-day chart has been oversold on the S&P 500 since the pandemic bottom? Total of 4 times, including now. Okay, 4 times. This is the 4th time. Last time you got this oversold, 3-day chart was oversold, was last year at the tariff sell-off. Strongest turnaround rally in history. The time before that was 2022 bottom. The stock market doubled from the 2022 bottom. And the time that you got oversold on the 3-day chart on the RSI before that was the pandemic bottom, and the stock market tripled off the pandemic bottom. Understand, in isolation, this can still go down more, just like it did over here. And if you look at our prices, we're at 63.89. We can come down to 6,000, 6,200, right in this range. But you're going to get a big rebound, which is my base case, to a lower high or out into a new high. But you're going to be rebounding, I believe, into the summer. So let's go ahead and move forward and check out what we got going on in the cryptos. So if we look at Bitcoin, lunar cycle's coming up April 1st. I think that's really interesting. Why? Be over this all the time, guys. Looking at Bitcoin. Previous cycle, we got an 11,000 point decline after that lunar cycle pivot. 11,000 points, 14.5%, let's just call it 15%. Cycle before that, we got a 10,000 point rise, another 15% rally. 15% rally, 15% decline. April 1st, we have another pivot coming up. Let's look at Bitcoin on a chart here. So Bitcoin, we have, if we zoom this thing in and squish it in, let me squish this in. We have a very obvious downtrend line connecting the all-time high and that previous rally high here before the failure point. We have that nexus there of that rally high intersecting right with the 54 RMA. You see this 54 RMA starting to cycle down here. You saw it right here at this failure point. From a timing perspective, your previous leg that you did, you made a sell-off low and you made the rally high in 54 days, roughly 17,000 points, by the way. And this current leg, you make a sell-off low. 54 days takes you literally to April 1st, which is also your pivot point here in the lunar cycles. Some interesting confluence. So April 1st, does this mean we rally 10,000 points in 2 days to beat April 1st and challenge the 54? No, obviously doesn't mean that. Although I would say If we got some type of treaty or something done, you could easily see that type of rally over 2 days, but that's not what I'm saying. What I'm saying is from a timing perspective, you have a pivot point coming up on April 1st, meaning you could start to see the reversal to the upside, which could occur anywhere along here as the 54 is dropping. If you got a sudden spike, you're looking up at 75 to 78K to challenge a 54. The key takeaway, regardless of this timing here, is this is a key point for Bitcoin. As you can see here, you failed. You failed down below your trend line. You had this uptrend line going through your square. You failed down below, back tested it, made a double top, capitulated 38,000 points. Here we are going sideways, trying to regain the uptrend line that you've had since the sell-off low. If you get back in here, at some point, you're going to contact the 54 RMA. It's a key turning point because if you can break it and flip it, you have 86K, 92K as your next targets, which takes you right back into this quadrant of this box. And of course, if you fail and you look down, this is your bottoming targets, which you have people that are very bearish are focusing only on these. 50K Bitcoin, 44K Bitcoin. Those would be my 2 leg down targets, 2 upside targets, but the key inflection point is going to be flipping that 54 RMA. Right now, we're at 67,386, and that's all the way up at 77.5. So we could be chopping down here. We could get some news about a treaty. You could see a sudden spike. At some point, you're going to intersect this, and this will determine the turn in the crypto markets. Everything will follow Bitcoin. Keep your higher low structure. This is bullish near term. You have your low, you have your higher low, you still have a higher low. Keep your higher low structure. Look for news catalysts. Could be a presidential post, whatever. When the market starts sniffing out that the war may be unwinding, you could easily see a rally take you up to test that 54. Conversely, bad news, poor escalation, maybe the unknown knowns coming into it, the unknown unknowns, I should say, coming into it, meaning something happens that we don't know could happen, a black swan, you could see this give way. So it's very important to look at your pivot points in Bitcoin, 62, and of course your cycle low here so far, which is at 59K. Keep those intact, keep the higher lows intact, and watch the markets. Guys, hope to see you on the Discord. Definitely follow me on X at Market Canary. See you on the next video. Have a fantastic week, everybody.